What's up, guys? Welcome to another edition of our Twitter Spaces. We're here joined by the legend himself, Mr. Tone Vays. And Tone, I want to welcome you up on the show. And shout out, by the way, to all our Discord members and newsletter subscribers and YouTube subscribers as well for taking the time to come talk some shop here on the show with Tone. So, Tone, great to have you, brother. How are you feeling today? Over the last week or so, we've been seeing some pretty bullish news from the Bitcoin side of things with spot ETFs and a lot of spot buying demand has been coming from Coinbase, which is really something you see at the start of a larger rally. So, would love to know how you're feeling about the current market conditions before we get into more broader macro topics and things of the like. And once again, man, love to talk some shop with you here on the show. Thank you so much, brother.
Yeah, thanks for the invite, guys. Definitely, this rally has been amazing. It's been a good 4 to 5 days. We're breaking 30,000. We pretty much touched 31. We're up at 12-month highs, and this does feel like a rally similar to the way we rallied off of 20,000 and the way we're rallying off of 25 that we hit like Friday or Saturday. So. I really do like it. I think this is the continuation of the bullish trend. I'm not going to say the bullish trend has started because I've said that months ago. I think the bullish trend started back when we bounced off of 20. And now the bullish trend should continue into the halving and past that. So definitely exciting times. The ETF news is definitely helping fuel the market. But I think it was going to go up regardless of the ETF news.
Awesome, brother. So, before we get into the meat of the conversation, could you tell the audience how did you get into the world of cryptocurrency, Bitcoin, Ethereum, and all that good stuff? How did you get into the world of cryptocurrency, and what was it about this market that appealed to you? And had you go into a thought process that was like, you know what, I'm going to be here for the longer term, and I want to build a brand off of this and connect with like-minded individual people that are passionate about the space?
Yeah, so I've been working on Wall Street since around 2006, 2007. I learned how to trade before that. I was trading on my own, but I started shorting the real estate market way too early. Kind of ran out of money shorting the real estate market, had to get a job. That job was at Bear Stearns, which a year later completely imploded because of the real estate market, ironically. And and I always wanted to just quit my job and go back to trading, which I did in 2015. And slightly before 2015, I run across Bitcoin. I mean, I've been hearing about it since 2011, but I never really looked into it until that 2013, 2015 time period when the Cyprus banking confiscation happened. And that's when it kind of hit me that Bitcoin is the only unconfiscatable asset the world has. So that's when Bitcoin piqued my interest during those 2013 Cyprus confiscations. And when I did quit my job in 2015 to be a trader, I was going to be trading traditional market. I wasn't really going to be focused on Bitcoin or the crypto market. But I just kept reading about it all the time. That was basically that was my interest um, uh, on the crypto, on Bitcoin mostly, not the rest of them. Never really cared about Ethereum. And since I was reading about it all the time, I decided to do something with it. So I started writing articles. I also started speaking at conferences. I used to love public speaking. I used to be a teacher as well. And getting a chance to travel the world a little bit, which I've never really done, and speaking at these Bitcoin conferences, crypto conferences, with my expertise on the finance world, the trading world, really got me into the world of Bitcoin from there.
Tone, so when you mentioned the Cyprus banking incident, I can't help but think about some of the banking crises that have happened over here in North America with the Silicon Valley Bank and things of the like. Do you kind of see a parallel between the two?
Yeah, definitely. There were definitely serious issues in the banking system back in 2008. And there are some parallels. It's not as bad now as it was then. I mean, you have to realize that environment and what caused that environment. Now, what caused that environment was um, people taking out five, six, $700,000 mortgages while having no job to pay for those mortgages. That is a way worse situation than what we had here. The recent banking failures, they're nowhere near as bad. They're nowhere near as systemic as what happened back then. I guess the one big problem that the world has today that it didn't have back then is the debt is now double or triple. And because interest rates are no longer zero, that debt is going to skyrocket higher. So government debt is actually a huge problem now, where back then that was not an issue.
Cone, and to evade a potential systemic break, do you think the Fed is going to end up cutting rates way too soon and perhaps bring an uptick on inflation? And the reason why I'm asking this as well is from a price action perspective, and throwing it back to like a historical piece, right? In 2019, when we had peaked at 14K, the Fed proceeded to cut rates three times in the span of 4 months, which led to a 50% decline. So, do you think history is going to repeat itself where they end up, cutting rates too soon and something breaks within the system, and Bitcoin ends up suffering from it? Or do you think like this spot ETF truly brings a new paradigm where perhaps cryptocurrency can rally during these uncertain times, just as gold did during the great financial crisis?
Okay, so a couple of things to unwind there. Let's start with gold during the financial crisis. Once the moment the financial crisis happened and the stock market fell 50%, gold actually fell 33%. So gold didn't do all that great. Now, afterwards, gold recovered fairly quickly and rallied to new all-time highs. It rallied big time, way before the market did. But what people have to realize is that when stock markets crash, everybody suffers. Companies go out of business. People lose money in their retirement. People start spending less money. People start investing less money. And when people start losing wealth, they need to sell whatever they can in order to put food on the table. So this is why gold also suffers, because some people have to sell gold. I remember reading articles how people are like replacing their gold teeth because they want to sell the gold teeth. Usually the older people that back then when gold was cheap, they used to put them in your teeth. So if the stock market is to suddenly big time crash, yes, the Fed is going to have to react and lower rates to try and support the markets. And will that help Bitcoin or hurt Bitcoin? I think it's irrelevant to Bitcoin what the interest rate is. But when the market crashes, again, same scenario. Market crashes, people lose their jobs, people feel scared. They're not going to be rushing out and buying Bitcoin. What's best for the Bitcoin environment is a nice, stable market where Bitcoin proves itself to be the better asset, to be the better store of value, to be a better investment than the stock market, to be an unconfiscatable asset when, the Prime Minister of Canada decides to cut away your banking services because you donated $20. And when these problematic things are happening, while the markets are fairly stable, that's the best environment for Bitcoin.
Good stuff, man. Good stuff. So, I do have one thing to throw in your direction, given that you've been in the space for a while. I wanted to know your thoughts on what's going on within the Bitcoin layer as far as like ordinals, right? Or as I like to say it, NFTs and altcoins on Bitcoin. When you first entered the space, did it come across your train of thought, or even your colleagues' train of thought, that one day you would be able to deploy quote unquote innovation on top of the Bitcoin infrastructure, or was it always just an alternative means of payment and a store of value?
It's really interesting how you phrased that question. Just a heads up, I happen to be going into the elevator, so in case you guys lose me, just be aware that will be right back once the elevator doors open. So
Yeah, the elevator got him, guys. The elevator got him.
Love elevators, man. Love them.
They got tone, bro.
Yeah,
They got tone.
when I was
that
joining
what's on that point? Never mind.
ago, I
No, they got
remember.
him.
Okay.
Yeah,
Let's,
yeah.
okay, I'm good.
Yeah, you're good now, brother. You're good now, brother. Tone.
He was good.
Yeah.
Sort of. Okay. There was a project called the very simple. You would take a Bitcoin, you would subdivide that Bitcoin into 100 million pieces because that's where you can divide Bitcoin by, and then each Satoshi basically is assigned a share of a stock. So you can take Apple stock. All Apple company has to do is can subdivide that Bitcoin, and they can now issue 100 million shares of their stock, each one assigned to a Satoshi. That was a project way ahead of its time. And that project may still be back, but people realize that, maybe this isn't a good idea, or these are very difficult challenges to implement. It's great that people think they can do like NFTs and ordinals on top of Bitcoin, but it's very, very challenging on Bitcoin main chain. What I advise everyone to do is to look at Bitcoin side chains for these projects, like the Lightning Network or the Liquid side chain or the RGB side chain. These things aren't really meant for Bitcoin on-chain layer. Bitcoin on-chain layer is supposed to be slow. It's supposed to be expensive. It's not supposed to be private. I mean, that's how Satoshi designed it. He designed it this way specifically to maximize decentralization, to make something that can be stopped. And something transparent is a lot harder to stop than something super private. Something that's expensive is a lot harder to stop than something cheap. So it's designed in a way to make it impossible to take down. And then all this other stuff could be built on top of the stuff that gets built on top of Bitcoin. So, and the whole concept of ordinals is tricky because you can't actually own a Satoshi. You think you own an NFT, but you can't really own a Satoshi. The Satoshi sits there in the blockchain and you're accessing it. And it's actually not easy to send a specific Satoshi to someone else. These are actually challenging problems in Bitcoin. And they're challenging a bit on purpose so that people really understand what the real utility and innovation is. And people always forget what the Bitcoin's innovation is. Bitcoin's innovation is your ability to have censorship-resistant digital transfer. That's it. That's the most important part. So far, the only use case has been money. It may be the only use case. We don't know yet. And it's way too early to know. But it separates itself by being decentralized. And nothing else can compete with it. Because you can't just, announce in a press release that you're building a decentralized project. That's not how it works. I know CZ wanted to work that way, but that's not how it works.
Tone, one thing that I also want to throw into your direction are the halving cycles between Bitcoin. Typically, we see a pre-halving cycle and then a dump leading into it, and then the rally to all-time highs, right? But given that, you know, the SEC sued all these crypto exchanges, and then pretty much a week later, all these institutions that have stake within those crypto companies, right? Specifically BlackRock, they have stake in Coinbase for custodial solutions and all that stuff. Do you think this might be a different year going into the halving, where potentially we could reach an all-time high going into the halving for the first time ever, or do you think it's going to be, just another halving cycle business as usual? And I believe the cost to mine one Bitcoin by the time we get to the next halving is going to be about 36 to 38,000 to mine per Bitcoin.
I don't think the cost to mine a Bitcoin is going to be that high. I think the cost to mine a Bitcoin now is less than $10,000, and I think it's gonna probably stay under 15,000 going into the halving. But that is not my area of expertise. Now, as far as cycles go, I do think that this cycle is going to be similar to the last one, where the ultimate high in Bitcoin comes after the halving. However, there is going to be a peak before the halving and a drop before the halving. We just don't know when. We don't know if that's going to come in a few months or if that's going to come in January or February. So it's impossible to properly trade the pre-halving hype and the post-halving hype. But what I am comfortable trading is the fact that we are in a bull cycle. And this is the time to be long Bitcoin. You don't have to be leveraged long Bitcoin, but this is the time to be long Bitcoin. A few months ago, I made a very public statement after we bounced off of 20,000 and we were breaking 22,000. And I said, we're probably never going to see below 20,000 ever again. And now I'm saying the same thing about 25,000. The chance to buy 25,000 was last week. I'm not sure anyone's going to get a chance to buy Bitcoin below $25,000 ever again. And but if we rally from here to 50, we can easily crash back down to 30. I think 30,000 is going to become the next major support area. Right now, I see 27.5 as support if we are to pull back now. But if we get to 34, 35, now I'm only going to see 30,000 as the support area. And then, we take another leg up. Now, how many of these, clean cut stair climbers we have into the halving, we don't know. I would love to see Bitcoin at higher prices. This bear market has been brutal. It's been hard on a lot of Bitcoin businesses. It's crazy how when I review the people that were buying tickets to my very first unconfiscatable conference in 2019, when Bitcoin was under $6,000, people were spending more money back then, and they were more comfortable doing it than today, even though the price of Bitcoin today is 5 times higher.
Yeah, some very interesting points there, brother. Wanted to also know your thoughts on the equity markets, right? We're seeing a lot of outperformance from tech things like AI, and now even some stocks from Will's Outlook. He mentioned Rivian has started quite a trend. So, Tone, I wanted to know your thoughts on the equity markets. Do you think potentially we can have something like the QQQs hit all-time highs, and we're seeing all this development from Apple with their AR, with their VR and augmented reality sort of things, and of course with Sam Altman's OpenAI and things of that nature. Do you think this is going to be the dot-com bubble 2.0 going into the later half of the decade, where we have a new tech sector emerge? And it's called speculation at the very beginning, but that's what starts these bubbles, and would love to know your thoughts on this from an equity markets perspective.
Yeah, so I've been bullish on the equity markets all year. I've been even bullish on the equity markets going back to late last year. I became a big bull of the equity markets. I am anticipating an all-time high in equity markets. Uh, maybe even this year. If not, I'm very confident it will happen next year. I think we're about to go into an unprecedented bull market. Besides the AI companies that are going to do super well, AI itself is going to make all companies do well because AI is allowing companies to replace the most expensive part of every single company, which is human labor. And they're going to be able to replace that with some of these AI tools. We're already seeing why the tech sector is doing well, and I pointed to this late last year when the big drop was happening. The first thing these tech companies did was eliminate the adult daycare center of foosball tables and free lunches and private chefs, and this was the height of craziness, where companies like Google and Apple and Facebook's, where their employees come in and hang out for half a day and then do a little bit of work. Look at Twitter. Uh, Elon Musk has fired like 80% of the Twitter staff. He fired the most expensive Twitter staff. That lady that was making 17 million blocking people on Twitter. I mean, this is ridiculous spending by the tech sector. So the tech sector got rid of a lot of these overpriced managers. Now these managers, they were properly hired. They were just unnecessary, but they are highly qualified tech people. And these highly qualified tech people are now being hired at non-tech companies to solve their tech issues, and AI is going to be a big part of it. So I think that companies are going to get a lot leaner. They're going to be a lot more profitable, and I do see a massive bull market coming. There's another reason why I see a bull market coming, and that's the rotation out of what I think is the most risky asset in humanity right now, which is government debt. Unlike a company like Apple and Facebook, if that company goes bankrupt, there are some assets there. They own buildings, they own real estate, they they own printers. They own something, right? There's something there to be sold. They own intellectual property. When a company goes bust, someone comes in and buys the intellectual property. When the government bond can't be paid, you get nothing. And throughout history, that has happened. Countries default all the time. It just hasn't happened to Western countries all that often. But I think the problem is we're about to see is Western countries not being able to pay their debts. The United States had to eliminate the debt ceiling altogether. And with this 5% interest rate, people are underestimating the exponential rise in the government's liabilities of paying interest on national debt. The national debt is now over 30 trillion. And a few years ago, it didn't matter because interest rates were below 1%. Now that interest rates are above 5%, 5% on 30 trillion is a lot. Half a percent on 30 trillion is negligible, but 5% on 30 trillion is a lot. So government's biggest expense 3 years from now in the United States is not going to be defense spending. It's not going to be healthcare. It's going to be paying interest on debt, which is the most unproductive way to spend money ever. And I would stay away from government bonds. They're going to be okay for the next few years, but they can crash to zero as quickly as Bitcoin just went up 5 grand.
Some great points, Tone. Really interesting points. Love your perspective on all things AI, and especially talking about government bonds and things of that nature. And I want to pass it on over to the rest of the panel. Just to save some time and be mindful of your time, brother. But I'm going to pass it over to Will's Outlook, and I see the space is now filled up. So, ladies and gentlemen, if you guys are new to the spaces, we're here joined by Tone Vays, and we're just talking about the state of the market. We're talking about crypto. We're talking about equities and things of the like. And all things regarding Bitcoin and all that good stuff. So if you guys are enjoying the content, feel free to follow the speaker panel. And if you guys enjoy these spaces, we host these throughout the week. So without further ado, Will's outlook. Go ahead and give us your outlook, man. Great to have you up on the panel as always.
Thank you, thank you. Well, really, I was looking for Tone's outlook, but no, I do have a scenario though that I want to lay out for you, Tone. But first, I want to kind of elaborate on your conversation with AI. And man, I'll tell you, like at the start of the AI buzz, like I was not on board. I was not. I was so off sides on that too. I think, like AI it's been a thing for a long time. But I think when you look at it, you utilize it, you understand it. These companies, they're not only going to replace people with AI, they have to. They don't have an option. It's not even a point of firing people. They're just not enough people to consumption, right? So they have to figure out ways to trim and ways to kind of work around not having the employees they were looking for and replacing them with something more synthetic. I really have opened up a lot to that idea. I've opened up a lot to why the bid has been in that sector and why it can stick to that sector. Because I would say when it comes to tech, it's the easiest sector to actually eliminate people and replace that with some type of synthetic person, right? Whether it be AI or one person, in the Philippines operating through VR or AR, across the world through many different hotels or motels or whatever, there's a lot of different utilization, I think, in that sector and being able to use that these companies, people are bidding them because their value will go up because their costs will go down. And I loved how you laid that out. I think it's a really great point that a lot of people probably didn't really pick up on at the beginning. And that's why I wanted to kind of re-elaborate, kind of my thoughts behind what you said. I would say this too. We talk about the halving. We talk about when the halving comes. The halving's not really a time limit. That's what a lot of people don't understand, or a lot of people don't even know. Especially newer people to the space. It's the halving is created from a situation which is block solved, which only so many blocks solved can happen within so much time. But through a bear market, those blocks decrease significantly through user activity dropping. I want to kind of lay out a scenario and just give me your thoughts on what I'll say, and kind of elaborate your thoughts on basically what I'm stating. So, and I'm not trying to push you towards a specific answer however you feel. So I look at it like this: when it comes to ordinals and things building on we'll say Bitcoin, so on and so forth, there's a lot of exactly what you said, a lot of issues in that sector. The reason that I myself am most interested in this is because I think that it can open the door to higher user activity, faster halvings, essentially, right? Because activity only slows so much through that higher user activity. So I think anybody trying to innovate on Bitcoin, even if it's a bad take, right? Let's say ordinals was just the worst idea ever. I think even if it's a bad take, it would increase that halving time and increase the bull market, aka the gold rush every single time. We go through these processes of bear market, bull markets, and basically decrease these down times that we would have to these we'll say sideways price action after the bear going into the real peak of the bull. What are your thoughts on that specifically?
Yeah, so look, to me, it 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 may make a difference, but it makes such a small difference that it doesn't really matter. Uh, the halving cycle, whether it speeds up a little bit or slows down a little bit, is not the main driver. The main driver is Bitcoin's real utility, and Bitcoin's real utility is uh, unconfiscatability, censorship resistance, El Salvador switching their country to it. That's the main thing. Now, I'm not saying that massive use of ordinals is not going to help drive the price of Bitcoin higher. It probably will, but it'll have a small additional effect. Like, I know people really want to make a contribution to Bitcoin, No matter how small it is, they just need to have a contribution, and they push for that contribution. We see this with core developers. It's like they're so hell bent on getting their name permanently engraved in the Bitcoin code that they will push for any improvement to the code, even if that improvement is completely unnecessary. People tend to hype up Bitcoin in a way that makes sense to them, and to them it's the most important thing in the world, when in reality it's I like, for me it's like, yeah, it's not that important. Like Jason Lowery, for example, tries to make an argument that Bitcoin is so critical to national security, and the United States needs to be mining Bitcoin for national security, and he wrote a whole book about this, and this is like his entire essence in Bitcoin. And to me it's like, yeah, I don't care, it's not important. Like, what's important is people putting their wealth in something that their government can't take. That's way more important. Like, to me, they don't even come close. And same thing with ordinals. Like, I don't care. Well, like, fine, you like them, use them. But there's this desire, like, just because one person really likes something, they try to convince others to go along with it and do the same thing. And we're all guilty of it, especially in Bitcoin. Like, when I first got into Bitcoin, I was like telling everybody about it. And now I'm like, yeah, you'll figure it out. I kind of grew out of it, so I don't bother convincing anyone. They'll figure out on their own. But when it comes to these side things of Bitcoin, I'm not saying they're bad, but they're not, you know, they're not as good as they claim. I'm not. So that's kind of my view on it. Same thing with BRC20 tokens. Like, I'd rather see that stuff on a Bitcoin side chain where it doesn't bloat these fees. And while I don't mind high fees. High fees pay miners, and miners secure the Bitcoin network. So for half the people that used to yell and scream how, well, if Bitcoin's going to die because there's not enough Bitcoin subsidy, and so what's going to happen? Well, Satoshi even said fees are going to rise by default. But a lot of people think that fees is not enough for miners to keep mining. And my view is miners will keep mining at a loss. My view is that Bitcoin is so important to the world that people will mine Bitcoin and lose money on it. And it's a hard concept for people to understand, except every person in the space pays for an internet bill, and you do not profit from the internet. In fact, each and every one of you pays for more than one internet bill. You have internet on your cell phone. You have internet in your house. If you have more than one house, you pay for those internets. If you have kids, you pay for their internets. How many internet bills do you pay? And you don't make money from the internet. And the reason you pay all these internet bills is because internet is so important to your life. You're willing to pay money for it. How is that different than Bitcoin? Bitcoin is so important to certain people's lives. They'll be willing to pay to mine Bitcoin. And same thing with companies. There are companies that would not exist if it wasn't for Bitcoin. Why would they not spend a few $1 million a year mining Bitcoin at a loss in order to make billions of dollars for their company? So there's lots of reasons to mine Bitcoin. You don't need these additional use cases for Bitcoin. That's why I'd rather see these use cases on side chains where fees remain small for the average person who just wants to use on-chain Bitcoin and is not ready for Lightning yet.
I really appreciate your answer there, Tone. Like, that's the most down-to-earth, grounded response I've ever heard, man. I'm not gonna lie. Like, that was really good, man. Like, I don't come in, I don't boast people, man. I'm a straight shooter when I talk to people. But yeah, I really appreciated your response there.
Awesome, man. Now we have Doc Hollywood. Doc Hollywood, never seen you before, but welcome to the panel. Welcome to the show. And more than anything, welcome to the Because Bitcoin brand, brother. Great to have you, man. What do you got for us? What do you got for Brother Tone?
Thanks for having me. I've been waiting to talk to Tone Vays since 2017 when I was watching his videos and probably learned the most of trading and in kind of Bitcoin culture from the man up here. It's great to hear his take. I really respect that. I also, come from these different communities where I'm trying to urge everyone to slow down and not to partake in this Bitcoin gold rush and to really educate yourself with the culture of Bitcoin, with Satoshi Nakamoto's vision. And for the laser-eyed maxis, I'm here to respect the ground that you paid for everybody here. So this is my real question, Tone, and I've been waiting to ask it since February. What do you think it will take for a Bitcoin laser-eyed maxi, who we have all the respect for, to move one Bitcoin from one of their 2009 wallets to buy not a BRC20, which is another shitcoin on Bitcoin, but to buy a piece of art that they like? What would it take, do you think? That's my question to you, Tone.
It just takes them to love the art, man. Like we've all done it. Like look at the Bitcoin trading cards. People are spending thousands of dollars on the Bitcoin trading cards. Hell, I did. I bought a couple of boxes. You just have to find something you like. See, Bitcoin is altering the collector's market, where I have a nice piece of art on my wall. I don't like talking about it too much. I also bought one of the first Bitcoin watches. Like, it's it just takes more. Like, look, there are a lot more people in this world. There's 7 billion people now. How many people were around during the age of Van Gogh, right? During that art renaissance, where some of the greatest art came? A lot less people, right? And yet, some of our greatest art is from that point in time. People were more selective. Like, you want to separate a Bitcoiner from his Bitcoin, offer him something. Offer him something impressive. Offer him something better than Bitcoin. And he'll buy it. They'll buy it. And right now, Bitcoin still has a high chance of going higher. But I'm telling you, man, a lot of people missed the exit at 60,000. You only hear about the 5 or 20 people that exited perfectly at 65,000. The majority of people did not. And I talked to a lot of people that missed the exit at 65,000. And so many of them are like, I can't wait for it to get to 80, 90. I will diversify. Most people will start diversifying their Bitcoin at about 100,000 a Bitcoin. And then they're going to be pissed that Bitcoin went to 300,000. But they are going to diversify out of their Bitcoin at 100,000. And you better be ready to offer them something they want to spend that Bitcoin on. Might as well be a piece of art. But will it be digital art? That's trickier. Because us as Bitcoin maxis, and I wasn't, the crazy laser eye Bitcoin maxi, I'm more of a realistic one. And us as Bitcoin maxis understand that when it comes to digital scarcity, Bitcoin is the biggest scarce digital asset. But when it comes to physical scarcity, we also understand the value of a nice piece of art in the physical world, not in the digital world. In the digital world, Bitcoin is king for us, and it may stay that way forever. But in the physical world, there are still things like, I've been talking about Bitcoin for a decade. How much longer are people going to talk about Bitcoin without spending their Bitcoin? But eventually, old age hits us all. So I would rather be impressed with physical goods than digital goods, because because of my full understanding of digital scarcity, it's going to be hard to beat Bitcoin digitally, but physically, sure.
Do any of the rare Satoshis, there's like only 300 and something rare Satoshis that, coming from like the Ordinals protocol, they've assigned different types of traits to Satoshis. Do those rare Satoshis, when there's only 300, or there's like an epic or whatever Satoshi that can only be mined the first Satoshi mined after the halving, like there's only going to be a few of those. We're inscribing a Banksy, right? That's what I thought was a way to get a lot of attention to the space and bring in new entrants and collectors rather than trying to sell it to the people that are already here. I'm looking at it like, how do we reach the masses and how do we get people interested in Bitcoin that never had, any reason to get involved? But go ahead, Tom.
See, I'm looking at it from the complete opposite perspective. And from the opposite perspective, what is more important? Uh, Satoshi collectibles or Satoshi the financial asset? And Satoshi the financial asset is more important. But the only way Satoshi the financial asset can achieve its greatness is if every Satoshi is fungible with every other Satoshi. So while these efforts and valiant efforts to, make these Satoshis unique actually takes away from Bitcoin's fungibility. And if Bitcoin's fungibility, that every Satoshi is as equal as every other Satoshi, ends up in serious jeopardy, guys like me will push for a soft fork to eliminate all identifiable marks on a Satoshi. So you have to be real careful with your end goal of what the ordinals protocols are trying to do, because you can be overruled by the node running die-hard purists of Bitcoin.
Good
Big
stuff,
thing.
Doc. Great having you on the panel, brother. Let's go on over to BRC 20 coins, and then we'll pass it on over to Lady Trader Raw, and then to Tucker and Snorlax. BRC, what's going on, brother? Great to have you on the panel again. Hope you're doing good, man.
What's up, brother? How's it going? Thanks for inviting me up to speak. I appreciate it. So I just want to touch on a couple things Tone said. Well said on a lot of your thoughts. A lot of us are into ordinals and things to make Bitcoin fun again and spend our Bitcoin. I've followed you a while as far as trading goes. I do like some of your points as, the 27.5 ranges. We may follow some of those same different numbers. I do like a 31.2 to 31.5 range, and then if the monthly close is over kind of where we're at, I do like running back towards that 50s. To touch on that, I do think a lot of it has to do with on-chain activity now, since a lot of people aren't buying Bitcoin per se, or assets with the current situation around the world economics at the moment. So I've got some questions for you. I've been kind of going in some rabbit holes and reading a lot of these messages on chain since you've been in Bitcoin a lot longer than I have. When you see this recursive stuff coming up now to limit that size on chain, to really make things that are immutable, say music you lost back in the day from LimeWires or hidden underground stuff that you can't find anymore that would be stored on Bitcoin forever. I see a lot of things about Wikipedia links and stuff that they've broken down, enable codes and messages on that stuff back in 2013. So why do you think it took this long for things like recursive to come up when those are messages back in 2013 about using scaling size and stuff on Bitcoin?
Man, that's a really good question. It's a hard question to answer. I think one of the reasons why things like these projects, like BRC20, like Ordinals, the reason why it takes so hard to get them moving on Bitcoin is because there's very little profit to be made from it. One of the reasons why everyone pushes Ethereum stuff is because people are holding Ethereum. And same thing with Solana and all these others. And the pool of people who you're trying to sell these projects to, your pool of investors into these ideas, when this pool of investors is coming from Ethereums and Solanas of the world, these people already proven that they're willing to invest in anything and everything. And in order for this stuff to really evolve on Bitcoin, or even to get moving on Bitcoin, like what happened with Ordinals and what happened with BRC20, it needs to be done by someone who knows they will probably not profit from it. It has to be more of a passion project and not for money. And second, it has to be simple. And since a lot of this stuff has already worked its way through the shitcoin space for years, it was simple for someone to just package it all together and tweak a couple of things and launch it on Bitcoin. So it has to. This is why Bitcoin doesn't have to be the first mover, right? Eventually, everything is going to get on top of it, because by launching on top of it, there's very little, I think I explained it. There's little profit to be made from launching it, so it must have already been, the tech must have already been worked out somewhere.
Appreciate that response. Thank you.
Awesome. Good stuff, brother. All right, now we're going to pass it on over to Lady Trader Raw. What's going on, miss? Great to have you back on the panel.
Hey, thank you so much for the invite. Doing great. Looks like we have a pretty bullish moves today that we are seeing in crypto market in general. Again, we talked about it yesterday as well about just being cautious. So I still am bearish short term until the end of the year, until the next halving. I absolutely do not see it, going above, even if we get above a little bit, 32 to 35. I don't even see it going there. But if it did, definitely not above that. And I do see some bearish news coming in pretty soon. I don't know what it would be, but just following the historical data, which is what I've done so consistently and very much like a robot when it comes to historical data. I was able to get a nice short off of 30.5K. That was my entry today. So I'm in that trade. I normally don't take day trades. It's every once in a while I do if it's a really neat setup. So it was one of those setups. So I'm carefully watching that. If the price moves back up there, I'm definitely going to get out. But my bias is short still for this market. It's going to be choppy. It's going to be confusing. If you go back on the chart, if you look at what actually happened in 2019, we saw some pretty similar moves on Bitcoin back then as well. And it was right before halving, right? This is what happens. What happens is that according to historical data, this has happened pretty much every time since the existence of Bitcoin, right? So if you go back in 2013, we saw a major run up. After that 2012 halving, we saw a bull market, then a bear market the following year, which was 2014, where we all got crushed, myself included, actually. Didn't know what we were doing. And then we saw a similar move in 2017, right after that 2016 halving, right? We saw Bitcoin make a mega move in 2017. Price made a top in December. And then we saw the bear year, which was 2018. And that was actually something that I was anticipating. In 2021, we saw something very similar. We saw the halving in 2020, and then a mega bull run in 2021, and then 2022 was the bull of the bear year, actually, and the price got crushed, right? And then it did bottom out in November last year. So, and when it bottomed out last year, this was very similar to if you go back and look at 2018, exactly the same price action, right? We had the bear year in 2018, price got crushed, and then it bottomed out end of the year, and then it started to make that the next half of the year, 2019, was actually bullish. And it was something I also predicted this year very publicly, that we will see that 6 months pump. The first 5 to 6 months, we will see that pump. And then the second half of the year would be bearish, which is what we saw in 2019, right? This is based on historical data. It's not my personal opinion. This is what has happened in the past. Will it continue indefinitely? I don't know. At some point, it may stop working, right? At that point,
Yeah, happy to comment.
Yes, go ahead.
Yeah, happy to comment on that. So, I also put out in the beginning of the year that we should be entering the bullish cycle. And Bitcoin tends to start rising in price with approximately 60 weeks before the halving. So within that year time range, Bitcoin starts to rise. Now, right before prior halvings, there did tend to be a couple of crashes. Now, it's really hard to judge the 2020 halving because the crash that took place before the halving had everything to do with COVID and the thing that happened over at BitMax. And so that was the 2020 halving. And the 2016 halving, yes, we also fell quite a bit before the halving, but we also went up quite a bit before the halving. We bottomed in August. There was a double bottom where we fell to below 200, and then rallied all the way to 500, I think, before going back down to 250 and then hanging out at 250 for a little while. Then we rallied again before the halving. So I personally think that not only are the $15,000 lows are in, the $25,000 lows are in as well, but that doesn't mean we're going to go straight up. My price target for the halving is approximately $40,000, which is not that different from the current price of 30K. Now, to me, the biggest indication that the bull market is back was the way we pulled down to 20,000. All my best TA signals all coincided on that pullback to 20,000 and the massive rally off that 20,000 between my MRI indicator, multiple moving averages, the prior swing high support, like everything coincided on that rally off of 20,000, which is why that was the most bullish I was. The move from 20,000 to 23,000, that $3,000 move, that's when everything changed for me. When we were consolidating, at 16, 17,000 at the end of last year, I was still potentially leaning even a little bit more bearish. And when we pulled into this $25,000 last week, I was leaning bullish, but not like with, but it wasn't as clean as the $20,000 bounce. That $20,000 bounce changed everything for me. So right now I am bullish. I'm not expecting like massive upswings, and there are not even black swans, but we know Mt. Gox Trustees is about to sell coins. We know there are other headwinds. BlockFi is going to sell coins. So many people sitting in losing positions since 2 years ago. They're dying to break even. There's going to be all these headwinds, but I just don't see them crashing the price down to any significant levels, because I think that there is enough people right now that are already in FOMO on that fear of missing out. And there's also a chance that countries have started mining Bitcoin besides El Salvador with this geopolitical mess that is happening over in Eastern Europe. So, and if countries haven't started mining Bitcoin yet, I think they're about to. As the price rises, I think it's actually going to bring more interest than less, and that's why I'm not anticipating significant lows. Of course, anything can happen.
Yeah, no, I can definitely see that being a case. And if we even go back like all the way to 2015, right? If we look at the charts there were some bearish moves after in the second half of the year, but it only lasted until about, August. It was choppy and bearish. And then obviously we did see that major crash in 2020 before having, but I'm not talking about that crash though. I'm talking about what happened in, 2019 before that, right? The second half of 2019 in which we didn't really
let me
have.
comment on that. Let me comment on that. The run up in the first half of 2019 went from 3,000, and I'm just doing this by memory. I don't have the charts in front of me. I'm actually sitting at a hotel lobby. So from 3,000 to 4,000 was a bit of a slow bleed. But then we rallied from 4,000 all the way to 14,000. That is a massive upswing. And right at the very top, in June or July 2019, when Bitcoin was at $14,000, I remember doing a video with my friend Ugly Old Gold, who's in his 70s and he's been a trader forever. And he talked about the backwardation that took place. While Bitcoin was 14,000, the futures markets 3 months out were pricing Bitcoin at 15,000. And we basically called the top because the price of Bitcoin went up too far too fast. We're talking a 4x move in a few months. Now, for Bitcoin to repeat that, I don't think we went up that fast from 15. But even from 15 to go 4x, we're talking 60,000. So yes, if we go up to $60,000 in the next few months, we can repeat the 2019 scenario. But we're not rising fast enough, and the futures markets are not, 8-9% into backwardation. It's just we're not rising fast enough for that. And this is the same view that I have as to why I was laughing at people that were predicting a 1929 style crash of the S&P 500. We're not even close. In order to get a 1929 style crash of the stock market, you need to double the price of the stock market for 4 years in a row. Like if you look at what the stock market did in the late 1920s, I mean, the stock market was rising 30-40% a year for like 4 or 5 years. And then we had a 90% crash. And I think we're not even close. Now, if the S&P doubles or triples in price over the next 2 to 3 years, which I actually believe that it will, I think the S&P is going to double or triple in the very near future. And that is the kind of environment that is needed to get a massive crash. And Bitcoin is no different. It's just on a shorter time scale.
Yeah, no, I could
So,
definitely see that perspective for sure. That we haven't really pumped fast enough, for it to make that kind of move. So I guess we'll have to wait and see how it plays out. I do see, however, today S&P 500, which on daily chart, I mean, to me, it did create that reverse head and shoulder, right, which can be extremely bullish. However, I noticed that for the last few days, it's been decoupled sort of from BTC, right? So Bitcoin has been making those green candles on the daily chart. S&P 500 is making those red candles on the chart. So at some point, they are currently decoupled, but at some point, it's going to start to follow. They're going to start to follow one another. So that would be very interesting to see where we will end up. But this was a beautiful move today. The way up and hitting that really the shoulder of that, the head and shoulder pattern on daily chart on BTC. So very excited to see what we have in store. My game plan is still waiting out until the end of the year and really purchase whatever I need to buy for the long term hold in January. Hopefully that's my game plan.
so Will, before we pass it on over to you, I want to give Tucker or Snorlax some time with Tone. Snorlax, if there's anything that you want to bring up to Tone's attention or anything you want to ask him, feel free to do so, brother.
Guys, unfortunately, I am running low on time, so maybe like 5 to 7 more minutes.
No problem, brother. No problem, brother Tone.
Perfect. Yeah, no, I only had one question for you, man. I saw in your bio that you were a quant on Wall Street. I wanted to ask you kind of more about that experience and how it's shaped the way you view markets today.
All right, so for full disclosure, I might have stretched the word quant a little bit, but you do get certain number of characters in the description. So I was on the quant team, but in order to really be a quant, you need a PhD. I have a master's degree in financial engineering, and my contribution to the quant team was managing the data in and out of the risk models that we were building. And unfortunately, I spent my entire Wall Street career on the risk side of the industry, not on the trade side. So there's two types of quants, those that write the trading models and those that write the risk models. I was on the team that was writing the risk models. And so I was at Bear Stearns during 2008, but our unit was actually needed. We were building risk models and for the hedge funds and running hedge fund data through our risk models so that the investors in these hedge funds have an idea of how risky their investments are with these hedge funds. So in 2008, when hedge funds are collapsing left and right, our services are actually badly needed by the pension funds, by the fund of funds, by CalPERS, the California Teachers Pension Fund, which is the biggest pension fund in America. So that's been my Wall Street experience, is building these models, and it's not as exciting as the movie Wolf of Wall Street will have you believe. In fact, the majority of the people that work on Wall Street, just go to work, do their job, come home, and live a pretty boring life. And that was kind of my experience with Wall Street. It was more on the boring side than on the exciting side. It's a lot more fun being a trader. Definitely more exciting.
All right, we'll bring it on over to Tucker and then Will's outlook, and then we'll start wrapping up. Tucker, what's going on, brother?
Yeah, I know you're short on time, Tone, so I'll keep it quick. I guess I just I wanted to talk about the bond market super quick and wanted to get your thoughts. I'm kind of under the assumption that the Fed will have to end up cutting to zero, and it's so that's one thing in the somewhat near future. But I guess number two is it's difficult for me to get kind of long-term bullish risk in general while the 3-month 10-year is so inverted. You know what I mean? Like, it's been too accurate every time of predicting downturns and recessions. So just wanted to throw that to you.
Yeah, so two quick comments. One, that's been that in a way that has been your minor shortfall. Is that while I completely agree with you, the inversion of the yield curve has led to recessions, but it's led to recessions like a year to a year and a half later, and the inverted yield curve can stay irrationally inverted for a long time, and we have an unprecedented irrational inversion of the yield curve because the rates were zero for so long. So we were in an environment where, while I agree it is scary that the inverted yield curve does lead to recessions, I'm not worried about it till later. And with the amount of money printing that they're doing, here's one more thing that I'm not sure I mentioned earlier. People are going to be scared of putting their money into government debt. So they will rush into the safety of the stock market. And it won't matter how irrational earning ratios get. It won't matter that Tesla's valuation implies that every person in the world has 3 Teslas. It won't matter. It'll be this irrational push into equities because they'll feel that's the safest place for their money. So between all of those things, and yes, there probably was already a recession, but the government has altered its definition. Plus, you have to figure with this automation AI stuff, as we discussed earlier, that could also have a bit of an effect where you don't realize it's a recession because some things are going up in price a lot, but some things are not. The AI, and I don't think there's anything magical about AI. It's just better computer algorithms. They're gonna make life, better and cheaper in certain ways. So I'm not that scared yet, and I'm letting the TA prove it to me. Like, hey, the moment we take out a significant low on the S&P, I'll be bearish. Until then, I'll ride the wave into a new all-time high on the S&P.
Good stuff. Will's outlook, man. Any closing statements you got for Tone before he leaves, brother?
Well, look, I'm not even gonna waste your time. I everything you've said has been on par with my exact thoughts, man. Like, I really appreciate your time. I'm in the same boat as you as far as following the market in the same exact way. I've also discussed the yield curve and stuff like that, and that it comes later. I think a lot of people, they don't realize the lag that happens with these markets. But yeah, definitely don't want to waste your time. I appreciate your time, and I hope we can chat more in the future.
All right, cool. So with that being said, thank you so much, Tone, for taking the time out of your day to talk some shop. Feel free to come on up anytime. We do these spaces throughout the week, brother. So, hopefully looking forward to having you up on the panel more, especially as we get the halving cycle underway. So shout out to all the speakers as well. Tucker, BRC 20 Coins, Will's Outlook, Snorlax, Doc Hollywood, and Lady Trader RA. And for the new listeners here on the Twitter Spaces, we are Because Bitcoin. We host these spaces throughout the week here on Twitter Spaces and on YouTube. If you enjoy this conversation, feel free to give us a like. And, of course, give us a like. that's for YouTube. Apologies for that, fellas. Feel free to give us a follow and turn on bell notifications to keep up with real-time market news data and to keep up with all of our shows. Really means the world to us, guys, that you guys are showing up to these spaces pretty consistently. And Tone, this was a great conversation. Learned a lot. This was some meaningful and deep conversation towards all things, Bitcoin, and we even touched upon some AI and some broader macro outlooks and all that stuff. And glad you got to chop it up with us. And it was quite a sight to see you interacting with Will's Outlook. Potentially you can rebrand, sir, to Tone's Outlook. I think that'd be pretty cool, man. But, we won't hold you up for any longer, man. I hope you have a good rest of your day, man. And God bless you, your family, your friends. And best of luck to you, man, for what's coming in the next couple of years. I think we're in for a good treat, man. I think we're going to go into a super cycle.
I think you want to say something, Wabi.
Oh,
Yeah, no, I was just
go ahead, brother.
I was just gonna say thank you for having me up. I had a good time. Thanks for the really good questions, and yeah, happy to come back and yeah, check out some of the events that I organize, guys. Unconfiscatable in Las Vegas in December, and Financial Summit down in Dubai this year in November.
Oh, we'll definitely go to one of those conferences in November, brother, and hopefully we can meet you and talk some shop in person, man. Really great
That was perfect.
conversation. So, Tone, man, have a good rest of your day, and stay safe out there, brother. And as usual, guys, this conversation is recorded here on Twitter and will be uploaded onto our YouTube channel. So appreciate you coming on, Tone. Not sure if anyone else wants to stick around, but Tone, we'll let you go now, brother.
Thanks,
Don't want
man.
to hold you up too long, man. So take care and God bless you, man. It was a great time talking all things markets with you, man. Really appreciate it.
I'll stick around for a minute, Bobby, if you want.
Yeah, no problem, man. No problem. I think we can talk some shop for about like 10 to
I just
15 minutes. But Will, is there anything that you wanted to bring up?
Yeah, I wanted to touch base on exactly what he said, man. This has been my exact conversation that I keep having with people. It's like, dude, the yield curve. I'm not saying you, Tucker. Obviously, you're just wanting to get a different perspective and see if his perspective's changed from what you've heard. But like I've discussed this with a lot of bears. I'm like, dude, the yield curve is something that comes later. It just comes later. You got to wait for the uninversion. Once the uninversion starts to happen, be cautious, right? All that good stuff. But like. It's been a major, I would say, point of my consensus on why I'm directionally long right now. So I'm just kind of playing the moves as they come, man. Like I'm not even worried anymore. Like before, there was a lot of worry, I would say. The way things were looking. But I would say right now, like I'm just looking for value and continuing to buy value. That's my biggest thing, man.
I think it's been a pretty good week so far, man. A lot of these altcoins have rebounded pretty hard, man. And so far, my thesis with the optimism token outperforming Arbitrum has come to pass, man. I don't really see anything else on Ethereum as far as the blue chips go, outperforming. And when I talk blue chips, I'm talking about like a basket of altcoins that tend to lead in the higher market cap region. And I'm comparing this to 2019, right, where we had things like Synthetics Network, Ren, and also Chainlink lead that initial like altcoin rally. And I think for the next altcoin rally, whether what's going on right now, I think like tokens like Optimism are going to be leading the next bull run. But if we do get a buying opportunity to buy Optimism once again at like under 90 cents, I'm just gonna double down on my bag once again, man. I think it's gonna do phenomenal.
Well,
But I'm definitely gonna take some off the table. Probably like 5%, 10%, rotate that into something else. But
yeah.
what were you gonna say, Will?
I was just gonna say, like, I'm glad you're bullish on optimism. I think there's a lot of value out there, right? Like just a lot of like I can go through charts all day long and find you stuff rolling floors that have real value that are being used in every single big business right now, right? I
Yeah.
can show you sectors that continue to get liquidity from who? From the people that print it, the government, right?
Yeah.
EV market is a government
And
printing machine.
Will and Tether also printed 2 billion plus over the last week or so. I think that's I think that had something to attribute to this current pump. You know what I'm saying? But yeah, that alt drop that occurred almost 2 weeks ago, man, it's still sticking in my head.
Oh,
Like almost every long, I'm pretty sure every long just got destroyed, like
bro,
completely decimated.
I posted like 20 charts showing like so many bullish divs on so many different altcoins it wasn't even funny.
Yeah,
And like all of them are bouncing. All of them are bouncing.
yeah. Lady Trader, what's going on, miss?
Hey, so I just wanted to jump in real quick and talk about AI because I did hear you mention it, that there was a discussion which unfortunately I missed. AGIX, which is one of the top alts for AI, Singularity, that's actually one ecosystem that I'm very carefully tracking because they are launching a lot of ecosystem coins. There was one recently, Cogito, they're doing something with green coins. So you know how we have stable coins right now. This one they came up with a new concept called tracer coins, and this is actually tied to, instead of being tied to a fiat currency, it's tied to a green index, which was pretty neat. So AGIX,
Man. That's
yeah,
wild. A green index.
green
Jeez.
index, yes. So
That's
and
a
you know
bit.
Sophia,
Yeah,
you know
yeah, yeah,
Sophia the robot, right? So
yeah.
Sophia the robot, that's part of Singularity, AGIX. I feel like they are kind of being the underdogs right now because not a lot of people are talking about it. Obviously, the people know about AGIX because it's listed on Binance. It's
Yeah.
out there. It is one of the top alts, in AI sector. But I don't see a lot of chatter about those ecosystem coins like Sophiaverse, which is going to come out soon. Cogito is already launched, and it's like, people, why are you not paying attention to this?
Yeah.
It's pretty crazy. So yeah.
Yeah, I think like for assets like that, which are like way higher on the risk curve, I think people would ape into that once like QE is on and all that stuff. And I think Pepe was an anomaly, to be honest, because it's the original meme of the internet, right? But that's doing pretty well today, and I believe Max like called out the exact bottom along with Will's outlook on the Pepe BTC pair, which is up quite significantly. Uh,
Hmm.
and so, it's been going pretty well. I see we have Matt here on the listener panel as well. Matt, if you want to come on up and talk some shop, he was one of our fellow bulls that was also enthusiastic just as much as I was when alt capitulated and BTC went to 25K. And one thing that he said was, for the first time since BTC was at 19K, I'm excited to buy again. And you had every single narrative really having the stars aligning, right? And it's like the silver lining for the local bottom to be formed is always like something related to Binance. And man, if Binance was just a regular like TradFi institute, it would have been shut down by now. But
Bro, you can't shut down finance. Like I know a lot of people talk about it. It's just like
yeah,
could they
it's usually
eliminate
a bot.
their US one? Sure. Like
Yeah,
but that doesn't mean anything. Like all they're gonna do is freeze assets,
yeah,
discuss it, go to court, yada yada.
yeah.
I've talked about this many times.
But I also did want to mention that there was a wick. There was a wick on Binance US to over 100K, and this is like the second time. It's the second time that it
I
happened.
posted it last night.
Yeah, the first wick to 100K plus was in
130K.
December. Yeah,
130K.
the first one was in December of last year, and then we rallied from like 16 to 21 in a short period of time. And now we have our second one. So, perhaps we do hit that 35K target, which I'm eyeing. 35K to 37K as my minimum target. But conservative target, early 40Ks, and maximum like bull scenario, like 50K, early 50Ks. So, I'm pretty enthusiastic about what's going on. And of course, like, buying LDO at a $150, sub 150. I mean, dude, that's a deal you can't refuse. I'm more
I would
bullish
say
on.
too, if you go back to the date where we were at the bottom of Bitcoin, I think
Yeah,
24.8. Like
yeah,
look through my timeline and look how many charts I posted
yeah.
with bullish
You
candles.
have a good outlook, man. I think we're gonna start doing some little rebrands, right? Me and Tucker are gonna do a rebrand. We're just gonna post some gym videos. So maybe Will can also rebrand and just like, teach people how to cook, right? I think that'd make for some good content. right? Instead of just talking about like why we're bullish or bearish, I think we should just pivot, a complete 180 pivot, and just turn into like a fitness page or a cooking page. I think that offers some quality entertainment, man. And Matt, I actually had an idea for you, bro. I understand you like going biking and rock climbing and all that stuff, so perhaps you can introduce the rock climbing community to Bitcoin, man. What do you say? How are you feeling, brother?
Yeah, I feel like there's plenty of Bitcoin surfers, so I'm gonna have to think of something, some untouched, maybe the half marathon crowd. I don't know. My wife's got the triathlons on lock, so I don't know. There's we can play around with that. Plenty of time in the bull market, right? When
Good
it comes.
stuff, man. I like hearing those words from you, bull market. So what's going on, bro? How are you feeling with the market, man? HUD 8, another phenomenal day, man. Truly another phenomenal day.
Yep, all the quality Bitcoin miners, the best in class Bitcoin miners are absolutely ripping. That was definitely to be expected. You know, if Bitcoin's putting in a 5 or 10%, you got to expect the best in class miners to put in a 15 or 25. And you know, honestly, I don't think they're done. Uh, the, I forget who mentioned it earlier, but as you move out across the risk curve, smart money is looking for deals across the board. They're not willing to buy Nvidia, Apple, Amazon, etc. at 52-week highs. Now they're looking for the mid caps and the small caps. Who hasn't? Who, you know? Where's the diamonds in the rough? Where's the stuff that got mispriced? Who never capitulated in the bear market
High beta
and is
moves,
looking
Matt.
to rise out?
High beta moves.
Yep, exactly. So you know, I have my favorites. I'm not here to shill anything, but for me, the range for Bitcoin though is still 25 to 31K. Can't talk about 39 or 45 or 50K until we break and hold 31K. That is resistance going all the way back to correct me if I'm wrong, but winter 2020. And then it ended up being support in 2021, the summer sell-off from China mining ban. But anyway, long story short, we got to break and hold 31K. So the healthy move here is consolidate right here underneath at 30K or 29K. Let the shorts and the bears get confident again. Let them try to add some shorts right here as rocket fuel to punch through. That would be the healthy move.
Great stuff, man. Great stuff, dude. I am still of the belief that 2 years from now, this is going to be looked at as a big accumulation zone, man. To be honest, and I still haven't opened an equities account yet, man. I don't feel I don't feel the excitement. Maybe if coin gets under like $30, something like that.
No.
Yeah, I don't think
Forget
that's gonna happen
coin.
either.
No.
Yeah, I don't think we're gonna retest those levels, but
So Marathon, Riot, I can name them all day long.
Yeah. Agreed. Clean Spark and let's see who else. Cipher. Like if I couldn't own Bitcoin, I would short coin and long one of those best in class miners. But all the news that you've been repeating recently this week, this is not good news for Coinbase. Every single ETF that's getting filed, every single bit of news that we learned about the new EDX market maker exchange run by the biggest TradFi players in the biz, more or less greenlit by the SEC. They're already in business with the SEC on all other types of equities and commodities. Like, none of that is good news for Coinbase. So I don't want to own any Coinbase at all.
You got a good point there.
Coinbase, I think, can be risky, but I'm sure we will have some opportunities on it. But I agree with those ETFs right now, Marathon Digital, the miners, and then Riot. Those two I definitely have on my watch list, and I'm waiting to have probably one of my biggest trades of my lifetime on those two. That's what I'm waiting for.
I was able to get early options on on some Bitcoin mining companies through leaps through 2025, like Hut 8, for example. Got a 100 contract option for 50 cents on Hut 8 with a 350 strike for January 25. So I'm just chilling on that right now. I kind of did those moves when ordinals started moving and saw this on-chain activity. So that's where a lot of my plays are in my Roth right now.
Good stuff, guys. I think this is a good place to wrap up. Unless anyone else wants to bring up any subjects, we can entertain the conversation for a couple of more minutes. But if this is all we got, I think this is a great place to wrap up. But yeah, I want to thank everyone in the audience. Thank you all so much for showing support day in and day out. If you guys are new to the space, feel free to follow us here at Because Bitcoin. Feel free to follow that giant yellow square. It really means the world to us, guys. Every single follow counts. We're a young startup, about 6 to 7 months old, and we produce content mainly here on Twitter Spaces, but we will be doing a lot more YouTube stuff. So if you guys enjoy this content, feel free to tell a friend to tell a friend. And if you guys want to support us and get to know us a little bit more, kind of what goes on inside of our minds when we navigate these markets, feel free to check out some of the links that we have in our bio. We have a newsletter, and we also have a Discord group that, it's more of a traders / alpha group. And, in that chat, we go over various plays. And, over the last couple of months, we've been killing it, right? We slated on Pepe. We did some AI plays with 0x0. That did a good near 15 to 20x. And, of course, with the OX, the Open Exchange token, we killed it on that as well. And some other names on top of that. So feel free to check it out. It's a 7-day free trial. And if you guys, enjoy the banter that goes on in the chat, you can go ahead and subscribe. That's how, you guys can support the business and all that stuff. And, that's how we're able to, keep up with the backbone of this business and produce quality content with you guys and have on some good guests like Tone Vays. And, earlier today we did have content with Blockchain Boy, so feel free to check that out up on our YouTube channel. And we're going to be collabing with him a lot more, so look forward to that. We also have some spaces coming up with Ben Cowan and also Eleanor Tourette and a few other individuals as well. So we hope you guys enjoy this content, and feel free to follow all the speaker panel as well. These guys are truly remarkable, right? Personalities, all that good stuff. And, we try to make it as personable and relatable as much as we can. So instead of having, your traditional boring space where it's just, oh, I'm bullish because of this, I'm bullish because of that, we like to add the entertainment factor into it. And thank you all so much for coming on today's show and sticking around. It truly means the world. Shout out to Will, Tucker, and all the other speakers. We'll be back tomorrow on YouTube at 10:30 a.m. Eastern time for our trading show. And then we have a space with Uncle Joe Carliser at 4:15 p.m. Eastern time. So, feel free to follow us. Turn on bell notice for one of the fastest real-time news market reporting data in the entire crypto space. Valentin's been busting his ass, putting out tweets left and right, quicker than DB, might I add, and also to keep up with all of our shows here on Spaces and YouTube. So thank you all so much, and if you guys have any ideas on who we can host, any topics that you guys would like us to cover, feel free to DM us. Our DMs are always open, and I'll usually respond to them within 24 hours. So feel free to do that, guys. Really means the world to us. And we'll see you all tomorrow. Take care. And as usual, this space is recorded here on Spaces. And for this space in particular, it will be uploaded onto our YouTube channel. So thank you all so much. Take care. Goodbye, and God bless you all.